The session is valuation under GST. The objective of the session is limited to understanding the legal provisions relating to valuation under GST and nothing more. During the session, I will briefly take you through the provisions relating to valuation in the Act and the rules framed under the Act. The session will be covered and the topics of discussion will be briefly as under. Firstly, I will introduce by giving a description of taxable event, measure of tax and the rate of tax. Thereafter, we will go to valuation of supply, concept of transaction value, and then inclusions and exclusions to the transaction value specified in the section itself. Thereafter, when exactly we should resort to valuation rules and the provisions relating to related person and the concept of related person under the GST law will be discussed. Thereafter, I will take up valuation rules and briefly discuss the valuation rules. There is a notified method of valuation, which is the last rule, and after that we will also briefly go through the schedule of supplies without consideration but which attract GST. The normal rule is there is no GST attracted if the supply is made without consideration, but the schedule is an exception to this normal rule. Now we go to the main section, which is section 15 of CGST Act. The section provides that value of supply of goods and supply of service or both shall be the transaction value. Now, what is transaction value? Transaction value is the price that is actually paid or payable for the supply of goods or services or both. In fact, all of you may remember that earlier there was a rule that tax has to be paid when advance is collected also. But later on, this provision has been withdrawn by making an exception in the GST law. Full stop. The requirement for payment of advance came because of the provision in the section that transaction value is the price which is actually paid or payable. Now we look at the transaction value. It has three limbs. The first limb is the price actually paid or payable. The second limb is the supplier and the recipient are not related to each other. Both of them have to be independent, and the price has to be determined at what we call arm's length. Only when the price is independent of relations between the supplier and the recipient, it fulfills the definition of transaction value. As mentioned earlier, if there is a relationship between the supplier and the recipient and that has affected the price, the determination of transaction value cannot be made under the section and under the main provision, and valuation rules will have to be applied. The last limb is the price is the sole consideration. For any transaction, price has to be sole consideration if it has to be accepted under the main provision of the section. The concept of transaction value has been taken from both customs and central excise. Needless to say, the time and place of removal, which were there earlier in central excise law, have been taken out, because in GST law there are separate sections to determine the time and place of supply itself. The determination of time and place of supply are also very important. Before we go to the inclusions and exclusions, and after explaining the main provisions, I will have to mention about the fact that valuation is a very important aspect in the GST law. This is because the taxable event in GST law clearly provides that for levy of GST on supply of goods and services or both, it is very important that there has to be a supply at the time and place, and and the GST is levied on the value as determined under section 15. For any taxation law, there are three most important aspects. One is measure of tax, the second is taxable event, and the third is rate of tax. Taxable event is determined under section 9 of CGST Act, which clearly provides that the tax is levied on the basis of value determined under section 15 of CGST Act. This section 15 of CGST Act and the value determined under this section is applicable to IGST Act and SGST Acts and UTGST Acts also. Therefore, the measure of tax, which is nothing but value under GST law, unlike the earlier enactments where the measure could be weight, volume, etc., has attained a lot of importance and therefore has to be studied carefully and understood. Further, even though the provisions have been borrowed from Central Excise and Customs, there are substantial changes made, and the valuation provisions in GST also there are a lot of differences compared to the earlier provisions. Now we come to the inclusions and exclusions in the definition of value or transaction value under the main section, which is section 15. The section 15 itself clearly provides for some inclusions and exclusions before proceeding to suggest movement to valuation rule when the transaction value cannot be determined under section 15. Now we look at the inclusions and exclusions. The first exclusions is that all statutory levies other than CGST, SGST and compensation levy have to be included. If we remember earlier also, for the purpose of levy of value added tax by the states, the taxes levied under Central Excise law and Customs law were included. Now also, only exclusions provided are CGST, STST and compensation levy, and no other statutory levies can be excluded. The second inclusion is the supplier's liability borne by recipient. The objective of determination of value is to ensure that all the costs incurred by the supplier to supply the goods or services and the profit of the supplier have to form part of the value, which is the transaction value. If the supplier's liability is borne by the recipient, to that extent the transaction value comes down. That is why the section specifically provides that if suppliers bear some expense, if the recipients bear some expenses which in the normal course would have been borne by the supplier, such liability has to be included in the value for the purpose of arriving at transaction value. One of the examples is the supply of molds, jigs, tools or machinery by the recipient of the goods to the supplier for use in the manufacture or production of the goods while supplying the goods to the recipient. These are to be included, and these were to be included even earlier when there was a levy on the transaction value under central excise on the goods manufactured within the country. The next one is incidental expenses of the supplier. The supplier has to incur expenses like handling charges, loading charges, and other expenses to supply the goods to the recipient. These expenses are also includable. If the transportation cost is incurred by the supplier, that will also be included. Another provision for inclusion is for inclusion of interest, late fee or penalty for delayed payment. Quite often, the recipient of the goods may not pay the amount which he has agreed to pay for supply of the goods. If interest is charged or late fee or penalty is imposed, the law clearly provides that tax has to be paid on such amounts also. If the provision of section 12 itself clearly provides that if a supply is made and whenever amount is collected for the supply, whether it is a debit note or a credit note, because of subsequent increase in the cost of supply or reduction in the cost of supply, to that extent the tax also would go up or come down. Another thing which is clearly includable is the subsidy provided by persons other than government. Government subsidies have been clearly excluded. If any individual company or an individual subsidizes any supply made to a recipient, cost of such subsidies have to be included. Then we come to exclusions. Discounts which are given at the time of supply and recorded in the invoice have been clearly provided to be admissible as deductions from the price. The question arises, what happens to discounts which are provided subsequent to the supply? Such discounts may be provided at the end of the year or periodically and may not be shown in the invoice. Section provides for exclusion of such discounts also, subject to the condition that the availability of discount is known to the recipient as well as the supplier at the time of supply itself. The second condition is that it should be not only known to both of them, it should also be possible to identify the discount invoice wise and allocate it invoice wise. Subject to these two conditions, such discounts also have been allowed to be excluded from the transaction value. So the main section itself provides which are the items which can be excluded and which are the items which can be included. Now the question arises, when do we go to the valuation rules for determination of transaction value? Main section provides that there is a transaction value which has three limbs which we already discussed. It also provides which are the inclusions and exclusions which we discussed. Now, when the value of supply cannot be determined because the supplier and the recipient are related to each other, or price is not the sole consideration, or the supply is without consideration but attracts GST, the section provides that the value will be determined by applying the provisions of valuation rules. The question arises, which are the supplies without considerations but attract GST? There is a separate schedule for this, and the supplies from between distinct persons, supplier and recipient receipts between distinct persons, agent and the principal, and disposal of business assets and imports by individuals are some of the examples of supplies without consideration which may attract GST. We will come to the details a little later when we go to the concerned valuation rule on these aspects. It is necessary to know some important concepts in valuation in the GST law. Some of the concepts were existing earlier also, but by and large, it is necessary to know these concepts if we have to understand the law relating to valuation properly. The first concept is the concept of related person. When a transaction is between two related persons, the value cannot be determined under the main section and valuation rules have to be applied. The related person concept, and in such cases the inadmissibility of transaction value was there earlier also in central excise law, and it is there in customs law also. However, there is a major difference between the concept of related person in the central excise law and the GST law. The major difference is that in GST law, the categories of related persons have been specifically mentioned. And the most important point to note in the case of related persons in GST law is the fact that there is no need for existence of mutuality of interest between the related persons for the transaction value to get tainted. Once a person is a related person, according to the definition and the description and details given in the section itself, there is nothing required to look into. The moment the person is coming under the category of related person, the transaction value has to be rejected and valuation rule has to be applied. One of the examples which was there earlier also, which is there now also, is the transaction between family members, say between brothers. There is no need to look into anything else and they are related persons. Similarly, a person having more than 25% control over another company, and if there is a transaction between two such persons, then also there is no need to go anywhere else. These are only some examples. For the details, the section can be referred. The next important aspect to know, and this concept was not clearly specified in central excise rules, the concept is sequential application of valuation rules. Now the valuation rules itself say that rules have to be applied sequentially. The next important concept is that of open market value, which is to be adopted when the transaction value is rejected. We will be coming to the details later. The next option after the open market value in valuation rules is supply of goods and services are both of like kind and quality to be considered in case open market value is not available. When these two are not available, namely open market value and supply of goods and services of like kind and quality, the cost of production of goods or cost of acquisition or provision of service become relevant. The concept of pure agent, which had been introduced in service tax law, continues to exist in the GST law also, and there is no difference between the concept of pure agent, which was there earlier for levy of service tax, and the concept of pure agent in GST law. Another new provision that is made available and the new concept introduced is the foreign currency transactions within the country. When a supply is made within the country and payment is made in foreign currency, how the value has to be arrived at is dealt with by the valuation rule, which was not, this provision was not there earlier. Finally, the government has retained the power to say that where input credit is admissible and the transaction is between distinct persons, the valuation can be nil, and this is covered under valuation of specific supplies. These are some of the important concepts which we have to know to understand the GST law relating to valuation better. Now, before proceeding to discuss the valuation rules, I would like to mention which are the rules. We will have a look quickly. Rule 27 is for transactions where the consideration is not wholly in money. Rule 28 relates to the supplies between related persons and distinct persons other than through an agent. Rule 29 is for supplies through an agent. Rule 30 comes into picture when the value cannot be determined under Rule 27, 28, 29. And this rule provides that value will be determined on the basis of cost of production or cost of acquisition or provision of service. Rule 31 deals with residual method of determination of value when the open market value, goods, supply of goods of like kind and quality, and value based on cost fail to give the value. In residual method, the objective is to determine the value taking into account the provisions in valuation rules and section 15, which is the value relating to transaction value, or what we call main section. Rule 32 deals with 6 specific services for which separate provisions have been made, which we will come to quickly at that time. Provisions of pure agent are covered in Rule 33 and foreign currency transactions are covered in Rule 34. Before we proceed for discussion, it is necessary to know what are the rules deal with. Rule 27 deals with where consideration, as already mentioned, consideration is not wholly in money. Rule 28, related persons, and Rule 29, agent. Now we go for discussion. Rule 27. First provision is that the value will be open market value. In fact, a detailed explanation of open market value is given, and it can be seen that open market value means the full value in money of a supply, excluding the taxes, and where the supplier and recipient of the supply are not related and price is the sole consideration. So we have to look at supply of same goods preferably. This can happen when the same supplier is making supplies to related persons as well as to others, and open market value of exactly same type of goods by the same supplier is available. It makes the job very simple. And normally there is another principle to be followed, is the price should be at the same time when the supply being valued is made. The quantity of supply also may have to be taken into account. If there is no dispute and open market value is available, the problem is solved. If open market value is not available, then the sum total of consideration in money and consideration which is not in the form of money can be converted to money and added to the consideration in money to arrive at the value. If that is also not possible, then we go to the value of supply of goods or services of like kind and quality. The goods of like kind and quality can be taken, but it has to be under similar circumstances, namely the characteristics should be same, quality should be same, quantity, functional components, materials, and reputation of the goods or services, etc. should be taken into account. This is being done in the case of imports in customs, where when the value is not acceptable and the transaction value has to be rejected, the imports of goods which are of like kind and quality are similar is taken into account to arrive at the value. This has been borrowed from there, but it is necessary to see that functionally, quantity wise, quality wise, the goods or services are comparable. Now, if value is not determinable under all the three conditions above, then we go to the other two rules, namely cost of production or acquisition of service or provision of service, and lastly the residual method. And the rules have to be proceeded sequentially. Rule 28 and 29 deal with supplies through the agent, and after we dealt with Rule 27, which has to be taken into account when the consideration is not wholly in money, Rule 29 deals with supplies to distinct persons or related persons. The distinct persons, according to the provisions of GST law, is the two registration certificate holders of the same PAN number. This can happen within the state. This also can happen in different states. The law provides that when there is a transaction between the branches of the same as taxable person, comma, such transactions are considered as the transactions between distinct persons. And the transactions between related persons also is covered under Rule 28. However, the provisions relating to open market value, value of supply of goods of like kind and quality are applicable here also, and the process is also same to arrive at the cost. The same process which we discussed in Rule 27 has to be followed for the purpose of Rule 28 also. The next rule is Rule 29, which deals with supply of goods made or received through an agent. The one difference that has been made for the purpose of supplies through agent or supplies to an agent is the provision providing for acceptance of 90% of the value of goods of like kind and quality in the market. If such value is available, the rule provides that 90% of such value can be straightaway adopted, or the value which has been charged to the agent, that can be adopted. This is because if the value at which the agent supplies the goods or services or both is adopted, there will be no provision for addition of value by the agent. Therefore, Rule 29 also makes separate provision for the purpose of valuation of supplies to or through an agent. In the case of distinct persons also, separate provision has been made to accept the value declared without any verification in case the recipient is eligible for input credit. If he is not eligible for input credit, the valuation rules and the sequential application which we discussed in Rule 27 will have to be followed. When open market value fails and goods of like kind and quality is also not available, then the next option and other options provided in the rules are also not available. Rule 30 will have to be applied, where the value of supply of goods or services are both based on cost has to be adopted. Here the value will be 110% of the cost of production or manufacture, cost of acquisition of goods or cost of provision of services. The provision in central excise law requiring application of CAS 4 as per the cost accountants cost institute has not been specifically provided for in Rule 30, but it would be safer to adopt it. When all those processes fail and open market value is not available, like kind of goods, value of goods of like kind and quality is not available, and cost of production or cost of acquisition also cannot be arrived at, the Rule 31 has to be followed, and Rule 31 provides for a residual method for determination of value of supply of goods or services or both. In this case, the rule simply provides that value will be determined using reasonable means consistent with the principles and general provisions of Section 15 and the rules. However, there is an exception for the providers of services. They can simply ignore Rule 30 and come to Rule 31 straight away. Which benefit or facility is not available to suppliers of goods. Before we go to Rule 32, we consider Rule 33 because Rule 32 deals with specific services. And while discussing Rule 32, we are not going to discuss each service in detail because the rule provides for method of determination of value for each service separately, and it is better to refer to those rules when we have to determine value in specific services, and a general understanding of the rule may not be required. Rule 33 deals with the concept of pure agent, and it's a very detailed rule. It is sufficient if we know that there has to be an agreement between the supplier of service and the pure agent, and the recipient of the service from the pure agent should clearly know from whom the supply of service is being received. It is always better if the pure agent gets the receipt for the service provided in the name of the recipient of service ultimately. Even if that is not possible, the concept of pure agent is that the service provided is passed on as it is. The pure agent will not take any benefit of the service or goods. He will not claim any ownership. The service or the goods will be passed on to the recipient as such. There will be no value addition to the invoice prices are charged by the supplier of goods or services to the pure agent. There has to be a contract between the pure agent and the recipient. These are some of the important aspects which should be kept in mind if pure agent concept has to be applied. One of the best examples of pure agent is the customers agents. Customers agents supply quite a few services which in reality are provided by others, and they do not charge any extra cost on the recipients. Examples are charges levied by port, customs duty, charges levied by CFS, loading and unloading charges, etc. Rule 32, as I mentioned, we are not going to deal with because that deals with specific supplies. The supplies which are dealt with by Rule 32 are currency exchange or money changing, booking of air tickets, life insurance, trading in second-hand goods, supplies of token, voucher, coupon or stamp, and lastly, which I had earlier also mentioned, is the power to the government to notify services or goods where the value can be declared as nil when the supplies are between distinct persons or related persons. Lastly, we come to some supplies without consideration but liable to GST. This is available in Schedule 1 to the GST Act, and I will quickly go through these supplies. Schedule 1 of the CGST Act: permanent transfer or disposal of business assets where input tax has been availed on such assets. Even if the assets are disposed of without realizing any amount as consideration, in these cases GST has to be paid. The next one is supplies to the related person or distinct person in the course of furtherance of business. Here also, even if the value is nil, the value has to be arrived at. One of the things which got included and subsequently a limit was brought is gifts given to related persons, especially to employees. When gifts are given to employees, there is a cap of rupees 50,000 per year per employee. If the amount of gift exceeds 50,000 rupees given to the employee in a year, the employer has to pay GST. The supplies to an agent and supplies from an agent, even if without payment, which can happen because the agent gets only the commission and the payment goes directly to the supplier, GST has to be paid. As we have seen, there is a separate rule to deal with supplies from or to an agent and the principal. Lastly, we have imports from related persons or distinct persons made by a person in India for furtherance of business. In these cases also, GST will have to be paid. This sums up the bird's eye view of the provisions relating to valuation in GST law, comprising of Section 15 of the GST Act and valuation rules, which is part of CGST rules now and are covered in rules 27 to rule 33. Thank you.